Where do I even begin to trade? It's a question that everybody asks themselves at one point in their trading journey. Whenever you hear the idea of somebody being a trader, that can mean a multitude of things. The important part is though, we all have to start somewhere. You may have heard stories of traders making thousands of dollars a day or millions of dollars per month, and you're like, how do I even do that? Where do I start? Well, let me tell you. The outcomes of making thousands of dollars per day or even multiple millions of dollars per month are both attainable by honestly anybody. In reality, most people don't want to put in the work to be able to achieve those outcomes. My goal with this course is to begin to give you the framework and the ability to achieve those outcomes. Just know that it's going to take time to achieve any positive outcome in the market, because things do not happen overnight. I promise you, they do not happen overnight for 99% of people. Maybe you might be a 1%er, and good on you, bro. But if you're not that 1%er, it's going to take some time. Regardless of how much time it actually takes you to achieve those outcomes, you're never going to achieve those outcomes if you don't start somewhere. Let me show you where you could potentially begin your trading journey on any market that you desire. With that being said, let's get into the slides. How do I begin to trade? One must first start by engendering a belief in themselves, in their abilities to succeed, and in their potential to infinity. You must always remember this. There are times in the market where you're just going to be knocked down. You're going to feel out of the count. You're going to feel like, man, I don't know if I can do this. I'm telling you, you have to believe in yourselves. You have to believe in your ability to succeed. And you just got to believe in the potential of what is to come in the future. It can be very hard at times when you are down a lot or where you're not seeing progress and you're like, I just don't know if this is going to happen. I'm telling you, any market that you choose to trade, it all comes down to numbers. Life in general comes down to numbers. It's a numbers game. In the beginning, the numbers can be against you, but the more that you learn, the more experience that you gain, odds begin to go in your favor. With absolute belief in yourself and your abilities to succeed, I'm telling you, your potential is to infinity. You can go to the stars with anything. You just really have to believe. I believe in you, but you gotta believe in you. Continuing on, then begin by choosing an instrument/market to trade, such as stocks, futures, options, foreign exchange, aka Forex, bonds, cryptocurrency, or crypto as they say, like Bitcoin, commodities, etc. There's a market for nearly everything in some way, shape, or form. And I mean this. There really is a market for everything. If you want to trade corn, you can trade corn. It's in the commodities market. If you want to trade Apple because you love iPhones, whatever the case may be, you can trade the stock market. If you keep hearing this word called the Dow Jones, you're like, oh, I want to trade that because it seems like everybody is dealing with that. Well, you just trade futures. If you're like, oh, I want to trade the S&P 500 because that's something that I hear everybody talk about, so I want to figure out what that is. You can do that by trading futures. I'm telling you, there's a market for everything. You just got to figure out what you want to trade. I'm telling you, there's a market for nearly everything. You just have to try out different markets, see what works best for you and your psychology and your trading style that you want to employ, and just go from there. Personally, over my 7.5 years of trading experience, I have experience with stocks. This is what I initially started out with in 2017. Then I transitioned from stocks to foreign exchange or Forex. Then I transitioned from Forex to futures. So I have a fair amount of experience with stocks, futures, and foreign exchange. I'm not going to lead you astray and tell you I have tons of experience with options, bonds, cryptocurrencies. I don't. I do not have experience with those markets. And if you want to learn about those markets specifically, I cannot help you with that. But I can teach you how to read the price action of those markets, because reading price action is the same regardless of markets. It does not matter what market you're choosing, whether you want to trade Bitcoin or whether you want to trade Apple or whether you want to trade the Dow Jones or whether you want to trade corn or wheat or rye or whatever the case may be. The price action of those charts can be read the same. And we will get into examples of how to read that price action later on in the course. But whenever you are ready to begin trading, you can just Google any one of these options and kind of see what does this market entail? You just got to begin by choosing one of these markets. Most people start with stocks because that's one of the most well-known markets is the US stock market. But you don't have to start with stocks. You can start with any one of these. Each market has its own uses, regulations, capital requirements, active trading times, processes, and volatility, etc. What I mean by that is every single one of these markets has different things that govern them and different ways of pursuing active trading within them. Like for instance, the volatility that I just mentioned. The volatility that you're going to see in the bond market is going to be way different than the volatility you're going to see in the cryptocurrency or market like Bitcoin or Ethereum or whatever the case may be. You're going to see some crazy moves in the Bitcoin market. But this bond market is going to be a lot more subtle and conservative. And besides volatility, I will be discussing most of these, but just know for right now that every market has its own market environment. One must open a broker account that gives them access to trade whichever instrument/market they choose to trade. Not all brokers offer trading on every single market. An example, some may not allow crypto trading like Bitcoin. But some may allow crypto trading like Bitcoin. You just got to double check that the broker you choose to use actually lets you trade the market that you desire. An example of some well-known brokers in the US are Charles Schwab, Fidelity, Interactive Brokers, E-Trade, Robinhood, and many more. I'm not going to recommend a specific broker for you to use because every broker has their pros and cons, and like everybody's personal situation is different. So one broker may be better for you to use because of your specific personal situation, but that same broker might give somebody else in a different personal situation a different experience because of the amount of capital that they're able to work with. So I'm not going to tell you which one you got to use, but these are just examples that you can look up or you can just Google. And I don't even know if you're watching this and you're in the US, so you might not even have access to these brokers to trade with them. You might have to use a broker that's within your country. Pretty much what you do to find a broker is you go on Google, you type in like best brokers in whichever country you are, and there should be multiple sites that give you various options, and then you just go from there. I will say though, I have personal experience trading with Charles Schwab, Fidelity, E-Trade, Tasty Trade, that's not on here, but Tasty Trade, and TD Ameritrade, but that was bought out by Charles Schwab. So that goes into the Charles Schwab bubble. And you don't just have to use one broker account. You can have as many brokers as you want. It's all dependent on how much capital you have to invest and where you want to place your capital. Like you might have one account that's a retirement account. You may have one account that's like a high risk account. And both of those accounts might be in different brokers, or they could be within the same broker. They're just listed as different accounts. So, I mean, that can be kind of confusing as well. But like I said, you just got to do your due diligence and look up which specific broker works best for your personal situation and your personal outcomes and goals. All right, so this is gonna be one of the first little like mix-ups because as you can see, my face looks a little different. This is an update that just happened this month of April 2026. So I had to change the original slide that was on this page. So now I'm gonna reread this slide. So now it says there isn't a specific amount of money that one must have to start trading. Depending on the market, one can literally start with $0 by paper trading or with $20 and be able to execute as many day trades as one account allows in the Forex market. With paper trading, a lot of platforms allow you to do that. Pretty much every platform that you can like trade anything on, they'll offer like a paper trading or a demo trading option. Those are always great to do. Those are always great to use when you're just starting out and like you don't know what the hell you're doing. Do not risk money at first. But then, whenever you want to start risking money, you can start super small and you can start with $20 if you have a specific broker that allows you to use $20 as a minimum. Some of them only allow like $10. Every broker is different though. Some of them, their minimum is like $10,000 or $1,000. Everyone is different. So it kind of just depends. Moving forward, since the pattern day trader rule has been eliminated in April 2026, all account sizes can take as many day trades as their account margin will allow. So this is huge, like absolutely huge. And this is why, because you are no longer limited to 3 intraday trades if your account size is less than or under $25,000, which has been the case for the past few decades. So the pattern day trader rule made it so that you could only take 3 intraday trades throughout a rolling week. So like intraday trade would be, let's say you get in on Tuesday morning and then you get out Tuesday afternoon on the same trading day. That's an intraday trade. You can only do that 3 times in a week. Before this ruling that just happened for the last like 20 years, that's all that you could do if you had less than 25,000. This rule just to get eliminated like a couple days ago, so it's really really recent. So I'm guessing a lot of institutions really haven't updated their policies. I don't know the case, like I don't trade stocks that often anymore, so you'd have to check in with your broker or whatever you're using to see like what's the case with your account if it's under 25,000.